Welcome to Brookfield Perspectives, a podcast that explores the Brookfield ecosystem's role in creating sustainable wealth on a global scale. On today's episode, the topic is power and just how much of it we'll need to sustain major growth in populations, electrification, and artificial intelligence. To discuss this energy ecosystem, we're joined by Scott Peak and Natalie Adomait, two leaders in our infrastructure and renewable power businesses, who are here to share their unique insights on how Brookfield is helping to turn the immense need for power into action. Natalie and Scott, welcome to the podcast. It's great to have you here with us today. I think it would be great to start and just have you both introduce yourselves. Natalie, do you want to start?
Sure. Natalie Adomait. I'm the Chief Operating Officer in our Renewable Power and Transition Group. So that means I oversee our global asset management teams, which is the team that drives the strategy and execution of our business plans.
Scott Peak. I've been with Brookfield for 10 years. I'm president and head of the Americas for Brookfield's Infrastructure Group, where I oversee the region and lead our infrastructure investment strategy.
Great. Well, we have the two people we need for this conversation because this episode is all about power and how much that has changed in a very short period of time. So it would be great to set the stage and help us understand what is actually happening in the energy market globally and the forces that are driving that demand for power.
Well, the short answer to your question is that the world's economy requires significantly more power than what's currently available. And therefore, all sources of electricity generation are necessary, whether it be renewables, gas-fired, nuclear, fuel cells, or beyond. And importantly, most segments of the infrastructure value chain beyond power are also necessary. Think midstream assets, transmission, distribution utilities, and data and digital infrastructure. If we had this conversation at various points over the past, 20 plus years I've worked across the sector, the conclusions would be different, as historically, electricity demand, particularly in the US, was stable with predictable demand drivers. If you pull up a chart of long-term US electricity demand, you'd see historically, it's effectively a flat line with about 1% annual electricity load growth. And while we've experienced population growth and proliferation of electricity-consuming residential and industrial assets, that new demand was largely offset by efficiency gains. But we're now approaching a step change for power demand. In the US, the historical 1% load growth is now forecast long-term to be closer to 3.5%, meaning in 10 years, US electricity demand is expected to be approaching 40% above today's levels, which implies over 170 incremental gigawatts of new power generation that does not exist today. The most pronounced electricity demand shift is occurring in the US, as it's where most of the hyperscale technology companies are based, and thus the main market they've chosen for their AI development. AI training and inference is leading to rapid development of greenfield AI factories, i.e. the large data center campuses supporting AI and the power-hungry compute residing inside them. In addition, the continuing shift to cloud data storage requires significant non-AI data centers. There's also continued expansion of electrified transportation and EVs and new industrial load from the push to increase domestic manufacturing. But data centers are ultimately the key contributor, and their power requirements have changed. They're getting larger in physical size. The amount of power they require is growing exponentially to meet more nuanced AI requirements. So this exponential growth, just for new data centers, is forecast to represent about 50% of the incremental electricity load in the US over the next 5 years. Back to your global question. Global electricity demand is forecast to increase 50% over the next 10 years, with data centers growing from 2% of global power consumption to approximately 10% by 2030. And this increase in electricity demand is leading to an unprecedented domino effect on the electricity grid and infrastructure more broadly. So we not only need much more electricity generation, but we need much more of all the infrastructure enabling electricity to be produced, transported, and stored. And the consequential capital requirements are staggering.
Yes, they are, especially given where we are versus where we need to be based on some of the numbers you cite. Natalie, are there any other drivers or any other dynamics for where we are versus where we need to go?
I think Scott did a fantastic overview of where the demand is really coming from. And I think what we've seen change across the sector. To put it very simply, given the vast amount of power demand and the demand drivers that we're seeing, the real bottleneck for a lot of these new industries, for the electrification of manufacturing, for the onshoring of domestic production, for digitalization and data center build-out, power is the bottleneck. And with that comes a huge investment opportunity. Now, I think one interesting perspective to think about, this is absolutely going to be an all of the above energy solution that needs to meet the challenge ahead of us. What's going to matter to the major buyers of power as they're balancing where that source of energy is going to come from is a few things. First, what is the cost? What is the fastest available power source to come to market as they're building out data centers and need that power very quickly? And what power sources can provide with the best reliability, because increasingly data centers are requiring 24/7, 99% availability in their power supply to keep those functions running. So we think we're going to see an increasing shift across all energy sources. We think renewables has a huge role to play here. It is the cheapest, it is the fastest to market, and it can be used in combination with other technologies like gas, nuclear, hydro, batteries to meet that reliability requirement as well. So it really is an all of the above approach. I think the one other trend as well that's probably worth mentioning is energy security. Over the last few years, we've really seen countries move away from that singular dependence on imported fossil fuels. Renewables has allowed countries to diversify their energy supply and really tap into those natural resources that have zero input costs and don't rely on foreign sources of power. I think that is increasingly an additional driver we are seeing for renewable energy built out on a global basis.
Cost, speed, and reliability. These really important vectors, whether it's for countries, governments, corporates, privates, et cetera. So let's step in and talk a little bit about Brookfield, what our role is and what role we play in meeting this growing demand and these key vectors that everyone is looking to for their power sources.
For decades, Brookfield has been a global leader in investing in critical power and infrastructure. As context, institutionally, we pay particular attention when capital needs are large and access to deep sector expertise in global operating capabilities are needed, as these are areas where Brookfield is differentiated. And in terms of large capital needs, trillions of dollars are required to develop AI factories and large industrial manufacturing. Further trillions are required to build the power and the transmission and distribution utility infrastructure, and even more is needed for new digital infrastructure to transport the data created to our phones and desktops via new tower infrastructure and fiber connections. We've made a number of investments relevant for this discussion recently, such as our $5 billion strategic partnership with Bloom Energy, which makes fuel cells which deliver reliable, scalable, and clean on-site power that can be rapidly deployed without legacy grids, or our $22 billion joint venture with First Energy Transmission, which brings long-term grid reliability and capacity in one of the largest regions in the US. The companies we own and operate are highly relevant to meeting the growing energy demand. They include 6 leading data center platforms across 5 continents. We have millions of utility fiber and smart meter connections. We have a portfolio of hundreds of thousands of towers, and we have tens of thousands of kilometers of gas pipelines.
That is a lot of transmission, obviously needs. Natalie, I'm curious, where does the renewable power generation element sit within that overall chain? Can you help us just understand where we started and then where we are today?
Yeah, sure. And I'll go back to a point we made earlier. Power ultimately is the bottleneck for a lot of the other industries and to meet all of the demand that we've talked about. And as we talked about, if you're a buyer of power, you're looking for those solutions that are fastest to market, cheapest, and the most reliable. And of course, if you're a government, you're also looking at energy security. Renewables is the easy winner on 3 of those criteria. Renewables is the cheapest form of energy available in most markets today. The levelized cost of energy for solar continues to come down. It's 90% down since 2009. Wind is down 70% since 2009. And it's also the fastest to build. Takes 12 to 24 months to build a new wind or solar project rather than years and years of permitting for other technologies. And if you look at 2024, I think it was 90% of the capacity added in the US was renewables. You can't just turn off that supply source and continue to meet the demand that we've seen over the past decade, but incrementally so the demand that we're expected to see in growth terms over the coming decade that Scott talked about already. We're also seeing the cost of batteries come down quite significantly. We've seen a 70% decline since 2016, and the ability to pair that low-cost renewable source with these new technologies like battery means you can increasingly meet that reliability objective we talked about as well. Maybe interesting to note for those that might be a little bit less familiar with Brookfield and our power portfolio and the power side of our business, We actually started investing in power over 100 years ago. So before the term renewable power was even mainstream, we actually started out in hydro, which was the original renewable technology. These assets, we liked them because they fulfilled all the criteria we look for in an energy infrastructure investment. They're low-cost source of power, they're long-dated cash flows, these are unlimited life assets if you maintain them well, and they often also have embedded storage capability. So they provide an incredible grid stabilizing service at the same time. Since then, our business has, of course, expanded quite significantly. And today, across the world, we have over 46 gigawatts of operating capacity. We have over 200 gigawatts of development capacity, and that's across hydro, wind, solar, batteries. And we also invest in a range of other energy technologies. And this is including recycling, biogas, sustainable aviation, carbon capture, and nuclear as well. So we've got an incredible diverse exposure to all of the trends in supplying energy to a wide number of customers across the spectrum.
When you talk about megawatts and gigawatts of that scale, for those listening, can you put some context around the step change in that scale for some of our clients who have that level of demand of power?
Sure. I can give you a couple of examples. One of the most exciting things I think we've been able to do within our portfolios is increasingly we have moved to a customer-focused business where we are working with our partners to provide flexible, creative, bespoke products to meet their energy needs. With Microsoft, we signed a 10.5 gigawatt framework agreement. That's 8 times the largest ever PPA they had signed before that deal. And we did this last year. Amazon, we're now delivering clean energy to across 3 continents. And earlier this year, we signed a first of its kind hydro framework agreement to deliver 3 gigawatts of carbon-free hydroelectric capacity across the United States. So these are huge step ups in the scale of demand in the contracts that we are executing, but also our partners are executing. And I think that's reflective of the demand trends that we're seeing. One of the reasons we've been particularly privileged to work with partners like these, but also being able to supply and meet those solutions is because of 3 things. We have a scale portfolio, so we can do transactions that are actually meaningful solutions to energy needs when you're talking to some of these largest and most sophisticated buyers of power. Second, we have decades of experience in power markets, so we truly understand the regulatory frameworks and how to develop these new creative solutions to meet needs and work with our customers to understand their biggest problems. And third, the fact that across our portfolio, we can combine technologies to offer a solution that is low cost, fast to market through our renewables pipeline, but also complement that with solutions from our hydro, nuclear, gas plus CCS, or battery pipelines that provide that reliability that they're also requiring. It's a really unique combination that a lot of other players in the space just aren't able to provide. And I think that in particular has been one of the reasons we've seen these huge step scales in our partnerships and our provisions of power.
Yeah, so the way you're describing it, you need to have all of those things in this chain. If one of them is not quite up to the level of the others, you're not going to close the loop, which is really what we all need.
Yes, we do lots of PPAs on a more bilateral basis at a much smaller scale. We're also invested in distributed generations. These are small scale rooftops for local industrial clients, local residential clients, or community offerings. Those are much more scale, and those happen all the time within our business. When we're thinking about those large new customers with that incremental demand that we're seeing over the coming decade, that's where providing those scale bespoke solutions, we're really unique in being able to offer those. And in particular, when you combine that with what Scott and his team are doing, we're not just providing the power, we're also able to provide capital for that full digital solution all the way down.
You're talking about this step change in demand and this scale, both for hyperscalers and large corporates, governments, et cetera, and also that trickle down effect to communities and sometimes the ultimate end, smaller scale users of this power. These step changes, this level, they don't happen all the time. And it's happened in a fairly short period of time. Scott, you mentioned this rapid upscale for AI power demand. So there's been a lot of activity and change in a pretty short period of time. And I think it might raise the question for some of, does that mean there's any meaningful step change or pivot in the overall energy strategy for these end clients and customers of ours?
Maybe echoing one of Natalie's earlier points around we're responding to the demand and we're responding to our clients. And Natalie outlined a number of the large partnerships we've done with the hyperscalers, but ultimately behind them, it goes back to data centers, where the scale of the data centers is increasing exponentially, where a large data center years ago was 35 megawatts, 50 megawatts, and now a gigawatt data center is on the front page of the journal every day, or multi-gigawatt data centers. So ultimately, the hyperscalers do a lot of contracting with data centers from a lease capacity, and they also do a lot of self-build, and they need power to run those facilities. When you're asking about the fuel mix, years ago, it was, I would like green power to run those data centers. But that's evolved from, I would like green power to green power would be great to I just need power. And so with that, that's transitioning from renewables and other traditional sources to when you look at the shape of the curve and the base load requirements that these customers require to run a data center 24/7 with high reliability, intermittent power, even when coupled with batteries, is just part of the solution, but it's not the full solution. So again, this goes back to the comment of any and all sources of electricity are needed, and that includes natural gas. In developed markets, natural gas is now the established long-term bridge fuel to meet the growing power demand while the world scales renewables and new technologies. In the US, particularly relevant for new data centers, the market quickly needs large baseload power sources, and ideally, they're clean and sustainable as possible. So renewables will continue to play a large and growing role. Nuclear will also play an important role in time, but ultimately natural gas-fired generation is the cleanest fossil fuel that is currently scalable. So consequently, in the US, gas-fired power plants are forecast to represent around 60% of new generation sources. And this gas-fired generation will need incremental midstream assets to supply the natural gas required to run them, such as pipelines, processing facilities, gas storage, LNG export facilities, and even LNG import facilities in developed markets outside of the US. We believe natural gas has long-term relevance as a transition fuel.
Yes, where that conversation started and how it's really picked up steam over the last, let's say, 5 to 10 years has been also a bit of a step change, Natalie, right? This concept of it's not just going to be all clean and it's not going to be all what people call dirty. We're going to have this concept of transition, and transition is going to mean different things in different places at different times.
That's right. I want to go back a little bit to what Scott said. I think he made an excellent point. Renewables are always going to play a large role. It's going to be the first solution for a lot of the reasons we talked about, but there just needs to be a step change and more. We talk about transition. Transition can mean decarbonization across multiple different sectors. But if we stay focused on the power sector in particular, where we started the conversation, one of the technologies where we've seen that go through almost a revolution has been nuclear. Nuclear also fits a lot of that ability to provide very large bulk power almost immediately. This is a fantastic technology. It is a green source, but it is also fully baseload. It is so valuable in being able to provide new incremental sources of power, arguably over a longer period of time. But once it's up and operational, these are very long life assets, and they're able to provide that reliability that we talked about earlier, as well as stabilizing benefits to the grid. Within our portfolio, this is somewhat surprising in a renewables business, but we actually have a very large exposure to the nuclear sector through an ownership stake in Westinghouse, which is America's leading nuclear technology provider. They serve about 2/3 of the world's nuclear fleet and nearly half of all reactors with their technology. And there's huge growth potential for this technology, both in the US, but also across the globe. We're seeing a lot of uptake in this.
You both have mentioned a few different examples of where all of these capabilities and these areas of expertise converge. I'm curious if from either one of your sides, you could just give a real example for how your two sides of this coin come together and how you work together on things, projects of this scale, and the level of demand to bring some of these things to life.
I'll say we're incredibly integrated. In fact, our renewable power and transition group actually was effectively spun out of our infrastructure group. So it's a team that is very well-versed and familiar with how we work together. One example I could share, and I won't steal Scott's thunder in talking a lot about the AI and obvious intersection that we have on that front, but one example I would share is within our transition portfolio, we have two businesses in the carbon capture space. And one of those businesses, which is called Entropy, specializes in carbon capture for gas assets. So to talk about a major trend that Scott flagged is a huge growth area we're seeing in particular in the US. This technology, we already have a working facility within this business. It's up and operational. We're under construction on our second project, which is a large expansion of the first. It's a carbon capture technology that's specifically for gas assets. So that's hugely complementary if you're thinking about quickly adding net new power to the grid in the form of gas that can provide that 24/7 power, but over time looking for that decarbonized capability. The technology we have through Entropy is able to provide that. And there's a lot of opportunities for us to work quite closely with Scott and his team as they're building out the gas generation part of the portfolio further.
As Natalie mentioned, the renewable and transition team spun out of infrastructure. So working together and collaborating is second nature. And ultimately, renewables need infrastructure to function, particularly at scale. Think transmission and utility grid connectivity. So our collaboration is both a necessity and a key competitive advantage. Working together, we're able to comprehensively serve the market with not only capital, but deep sector and operating expertise. And we refer to this collaboration as the Brookfield ecosystem. We have leading operating platforms of scale in each sector relevant for the energy market. And as Natalie alluded to, we are launching a new AI fund strategy, which is a natural extension of our platform in response to the large capital demand signal stemming from artificial intelligence. Think the data center, think what goes in the data center, and all of the key infrastructure connected to the data center. And our ability to collaborate and deliver full service across that Brookfield ecosystem is very powerful. If you step back, our renewable business is the single largest provider of green power to the world's largest technology companies. Our real estate business leases to the leading technology companies in our premier office buildings, our warehouses, and our science parks. And last but not least, we're one of the largest owner-operators of data centers around the world. So when you combine all of those together, we have deep relationships with all the key customers. We have scale in each of the industry verticals relevant for energy demand at a scale that rivals most of the key sector strategics. And we have the sector expertise in the decades or even centuries, as Natalie alluded to earlier, of experience in these areas that's highly relevant for energy demand.
The demand is clear and the velocity of that demand is clear. Where do we see the actual interest, the buy-in, our consortium of stakeholders coming to the table about how to actually fund the development of this really important infrastructure and power generation?
We have a comprehensive capital offering across our infrastructure platform. And ultimately, each fund and strategy that we have stemmed from a demand, both in the marketplace as well as from our investors. So today, across infrastructure, we have multiple strategies across the capital structure. We have a comprehensive offering where we can be working with the largest corporates and governments to address whatever the capital need is, and sometimes at many points at a time across the capital structure and across dedicated funds of scale that can provide a comprehensive capital solution and long-term partnership for our customers.
And one thing I would add is we're always looking for those incremental vehicles that meet the same criteria Scott talked about, where there's investor demand, there's appetite to put new capital to work, there's attractive fundamental drivers over the long term, and we see a deep investment pipeline. A great example of this is spinning off of the flagship transition funds that we launched in 2021. We have now launched an emerging market strategy as well. So very similar focus where we're looking at renewable energy scaling opportunities as well as climate and decarbonization opportunities, but very focused on emerging market economies where we're seeing a huge amount of growth potential and a huge demand for the deployment of renewable energy, for the deployment of new energy efficiency solutions. But we needed a dedicated pool of capital that could correctly target the risk returns we're seeing in those regions. And quite frankly, at a ticket size that was more akin to a slightly smaller strategy than what we do in our transition vehicle flagship fund.
I'm really taking away from what you're both saying. Obviously, it's scale, but it's also velocity of what's going on and how quickly this flywheel effect is taking, Scott, as you said, maybe some of these learnings and these first mover projects in the US, but very quickly extending them wherever they're needed. I'm just wondering if we took a step back, what sticks out to both of you, maybe something you've learned or what's really exciting, what you're really looking forward to as we look ahead, given all of the things we've learned in this very short period of time overall about this power puzzle and how we're going to address it.
I'm excited about robotics. It's easy, I guess, to be excited about robots, but also we see robotics having significant interplay with the same evolving power demand story we've been discussing. As robotics become even more ingrained in the industrial manufacturing process, there will be a consequential increase in power demand. AI-driven robotics training and inference will require significant power, given the massive amounts of data that will be involved. This will require incremental AI factories to be built, incremental power generation sources, and incremental infrastructure across the energy value chain. We don't believe that current power demand forecasts, as dramatic as they are, comprehensively incorporate robotics as far as we can see. And to evidence our excitement, we've recently announced strategic investment in the robotics company Figure, which is advancing the development of humanoid intelligence. And in addition to our financial investment, we're also helping enable the robot to perform real-world tasks in human environments across our asset portfolio. So I can see in a not too distant future, more widespread use of robotics leading to another global power demand step change. So we're really excited about what's ahead.
That's a very hard one to follow up with. Scott's right. It's easy to get excited about robotics. I am now. Maybe first I'll actually echo something Scott said. I think the use cases of AI are only just starting to show real tangible benefits within the portfolio. And it's easy to see how as those use cases prove out and they prove their business value creation potential, we are going to see them scale so rapidly. And it is going to become a self-fulfilling solution for all of the data center build-out that we are anticipating and seeing already within our portfolio. Within our portfolio companies alone, we have increased by over 140% over the last year, the number of use cases that we have seen applied across our business. And over 25% of those use cases, a lot of them are trial and error, but over 25% of them now, we are seeing with real, tangible, immediate EBITDA improvements, which is really exciting. I was going to take your question in a different way, though. What are we most excited about in the next 5 to 10 years? I think it's going to continue to be working with our customers and truly doing this in a scale way and a more creative way going forward. I think we'll do more hybrid PPAs. We've done a lot of very large scale ones on a global basis with some of our key customers, but we're looking at it and we're exploring more opportunities to do PPAs which combined renewables plus storage. I think we'll see a lot more of those across the business. I think increasingly we'll also move from just serving corporates, which has been a big backbone and driver of growth, but also to start serving governments. And we're already seeing opportunities to do this in a material way where we can be the capital provider, as well as the operating expertise that comes to help to deploy real large-scale solutions on the renewable side, but also on the battery side to help solve some of the grid imbalance issues that they're looking for. And I think increasingly that is just a huge growth lever for a company like Brookfield that has the global reach, the scale, the capital, and the reputation to be able to deliver.
I would add, and Natalie spurred this idea in my head, where this collaboration, I'd say that we're seeing on the renewable side really as a necessity given the scarcity of power. I'd be excited to see that spread not just across power, but across infrastructure more broadly. Historically, on the renewable side, we would develop a renewable asset and ultimately sell it to the highest bidder, which may or may not be one of our customers. I think now customers are realizing that they need the power, and the old way of interacting and not collaborating wasn't efficient for either one of us. So is there a win-win way for them to be more transparent around what their needs are, where their needs are, and for us, therefore, to de-risk our development activities and give them higher certainty on power where they need it and when they need it? Seeing that same type of collaboration, which we never really seen before, given it was very proprietary and these large companies are very almost secretive in their intentions. I think seeing that with other large industrial corporates in terms of their infrastructure needs would be an interesting next step to see, where not only what their power needs are in advance, but laying out the infrastructure to be ready to meet those power demands wherever they are, and getting really ahead of the curve and enabling us to be proactive and collaborating with our customers would be a great next step for us.
Yeah, and as you say, this mindset shift of it's not a nice to have, it's a need to have. And how do we figure out how to meet that need and beyond?
I think the necessity is the mother of invention, and that's what we're seeing evolve in the power space, and we may see that evolve across infrastructure more broadly.
Well, I learned a lot from this conversation. It was really great to have you both here to educate us on all that lies ahead. So thank you.
Thank you.
Thanks very much.
Thanks for listening to another episode of Brookfield Perspectives. Make sure to follow us wherever you listen. You'll be the first to hear when new episodes drop.
This podcast is for educational and informational purposes only and does not constitute an offer to sell or a solicitation of an offer to buy any securities or related financial instruments offered or sponsored by Brookfield. The information and views discussed are subject to change without notice. Any investment involves significant risks, including loss of the entire investment.
Audiation.